Natalie, I think we can go ahead and get started. If you are watching this as a recording, welcome. If you're here live, happy to have you. My name is Rebecca Wayland. I'm a representative from Trident Proposal Management, and I am joined today by Natalie Sherod from Cavignac Insurance, and she's going to talk to us about the importance of ensuring your mission, specifically as it relates to government contracting. And I'm not going to steal any of her thunder, but she's got some really great tips and considerations to keep in mind, particularly for small businesses, just with regards to operating in and around government contracts. So, Natalie, if you can go to the next slide, please. Just a little bit about Trident before we jump in and I turn over the microphone. We are a full service business development firm. I'm going to tell you a little bit more about that in a second, but basically we have a whole team of capture and proposal professionals who work to support our clients, hopefully you, right? Our core focus is helping government contractors identify, position for, and win government contracts with our professional and smiling staff who provide quality service. You can see our core values here that we embody and really hold up as being very important to the way we conduct ourselves, as well as the way we work as a team and with our clients. So you can count on us for military level professionalism, for an element of teamwork, for being focused on this client-centric excellence, owning the outcome, right? We take responsibility for what we do, and we're going to be with you through it all. And then we have the core value of thrive as well. So we just really appreciate everyone's authenticity and resilience and ability to show up as their best selves, because we know that makes us better as a team. Something else that's a little bit unique about Trident, if you haven't worked with us before, is that we do create portable and flexible job opportunities for drilling reservists, veterans, and spouses of active duty around the world. We're a very military-friendly company, mostly because a lot of us are in and around that still today. So we love to have wonderful players like that on our team. And we are a service-disabled, veteran-owned small business. So like I mentioned, we have this flexible and scalable team that is globally dispersed because of our wonderful mill spouses. We are all over the place. I'm in Hawaii. Morgan, who's one of our co-hosts here, she's in North Carolina. And we've got people across the nation between she and I. But we do provide that full business development support to include business intelligence and pipeline management, capture management for specific opportunities, helping you engage with the clients, the actual proposal development and management during that 30-day, tough period when you're actually writing the proposal and trying to get your best solution in front of the government. We also offer training and advisory services, and then we have a fantastic executive and presentation coaching branch to Trident. And our president, Jeff Everidge, whom you see in the picture guiding these folks, is actually the one who connected us with Natalie and Cavignac. So we're very excited to help co-host this webinar today as we support small and large federal contractors. And I think, Natalie, that's the end of my spiel. And I'm going to, oh, actually, no, this is us again. So one more introduction. This is myself, Rebecca. I've already introduced me. I am the Chief of Staff at Trident. You may have seen me on other webinars. Morgan keeps signing me up for these. So thank you, Morgan, for getting the word out about this one. But mostly I do the GWACs and the multiple agency contracts, or the multiple award IDIQs. So Polaris, Oasis Plus, NASA SOUP, Seaport. If you need help getting onto one of those larger contract vehicles, give us a call. If we don't have a dedicated campaign going for it, we can usually still offer some support services because of that full business development lifecycle that we provide. I've been with Trident for 10 years. Quick plug, I am the co-author of our Fast Prop system, which is really just the down and dirty, nitty gritty, what you need to know to be able to submit a proposal, especially if you're working with limited time and resources. And then I am that military spouse, but also a Navy veteran and USNA grad. And we are, again, so excited to have Natalie Sherod here today from Cavignac. She is a very seasoned commercial insurance broker with more than 10 years of the underwriting experience. And I love the way that you phrased this in your bio, Natalie, where you are an expert in understanding policy forms and language to help navigate the complexities of insurance with, if I could speak, it would be a much better tagline, precision and insight. And I just thought that was so eloquently put. And I thought, oh, that's the kind of expert I need in my life. So I'm excited to turn this over to you and let you tell us all about your topics today. So with that, now I'm ready to relinquish the microphone and go on mute.
Awesome. Thank you so much, Rebecca. And thank you to Trident for having me here. Every time I do a presentation, it reminds me it's time for a new headshot because hair color is one of the past. But so moving on from that, I appreciate you guys spending some time with me today. I know it's Friday. Hopefully there are some wonderful weekend plans coming up. But again, do appreciate you spending some time just to learn a little bit more about some key considerations for government contractors with regards to insurance as well as just risk management. One thing I hope that you get from the presentation today is there are multiple ways to manage your risk. Insurance is one of them, but it's important to understand other aspects as well so that you can make the right decision for your company. So today we're going to go over a few things. I do want to spend a little bit of time just going over the current market conditions because they're a bit of a mess right now, and just arm you with a little more information of why things are the way they are, potentially some areas for improvement, and then quickly moving on to the meat of the presentations, which is the risk considerations specifically to government contractors. And then at the end of this, we'll touch slightly on just some alternative risk transfer strategies. Again, as I mentioned, there are multiple ways to manage your risks. We want to make sure that as your company grows, that you're looking at different ways that make the most sense. So there are some challenges that we're facing in the market right now. We are seeing a lot of large increases for anyone that has a heavy property exposure. Luckily, for a lot of our government contractor clients that are professional services, as well as some of those bricks and sticks contractors, as long as there's not a lot of real estate that's owned, you're not feeling the effects of this. However, your clients might be. So as if you are in construction, working both in the government contracting space as well as the private sector, this is a key issue that we're seeing across the board. At a personal level, it's also an issue that homeowners are seeing. So just wanted to touch on that a little bit. And as well as on the general liability and more casualty side, we are seeing rates increase there as well, along with constricting underwriting. So what's happening is, 5 years ago, your broker might be able to go out and get a policy for you, and they might have 10 different options. So you really are in the driver's seat for that. Who do I want to work with? Who has the best terms, conditions, and pricing? Well, now you may only have 2 or 1 option, just because underwriters are really constricting their appetite as well as their capacity. So that can be challenging in terms of pricing of a renewal, availability of coverage, and really just focuses on the importance of being a better risk than the person next to you. So if an underwriter is going to take a chance, they're going to do it with your account and not someone else's. So just some key drivers of that. On the property side, definitely the amount of catastrophic losses we've seen over the last 10 years. At a very high level, the way insurance is priced it's really driven by what's called reinsurance. So think about, you own a home, let's say it's a $1 million home. Your insurance company may only insure 500,000 of that. They insure the rest of that risk. It all goes up. And then thinking it from a commercial standpoint, it's the same. If you own a $10 million building, your travelers may only insure the first $1 million. The next 10 are reinsured. Well, because of the catastrophic losses that are hitting that second layer, and we're talking large fires, even just last year in Hawaii, no one would expect that sort of natural disaster there. California, where I'm located, of course, we see a lot of that, as well as hurricane, the Great Freeze in Texas. There are just these massive catastrophic incidents that are now piercing that layer. So those reinsurers are they're definitely increasing their pricing, and then they're also restricting the coverage they're offering. So we're seeing major increases there. And that also kind of going to that third point, increased labor and material costs, that's a factor in that as well. Social inflation is really affecting general liability or casualty or auto liability awards. So something that used to be settled for $1 million is now going for $2 million or $5 million. And unfortunately, we're in a time where juries look more favorably on an individual than a business. So even if a business isn't liable or isn't 100% liable, they feel like it's more the business's responsibility, that there's this culture out there that is unfortunately, putting more of the blame there. So costs are going up. I did mention that the California Department of Insurance. I'm going to skip through that just because I know we're not all in California, but basically there are also legislative issues that are factoring into this increase in costs and restriction in coverage. So it's important to stay aware of that within your local community. So now let's dig into the meat of this. Key insurance and risk management considerations for government contractors. This is something I love to talk about because I feel like it's often overlooked from an insurance standpoint. Really understanding and navigating the intricacies of upstream and downstream contracts, meaning if you are a subcontractor, obviously what you're looking for is, what is the prime contractor looking for? And then can I comply from an insurance standpoint? And then if you have subcontractors, you are then transferring that risk down. It's really interesting when you look at most of the insurance requirements from the government. There's not a lot of insurance that's required. I have seen, I think the auto liability requirement is 300,000 and the general liability is 500,000. I can tell you in a traditional commercial policy, that is way below even the minimum requirement. So what is important to understand what your key risk is, and then make sure your insurance follows that. So if you're only required to carry a certain limit of insurance, you have to sit back and think, is that enough? If something happens, do I need to have more coverage? There's a lot of coverages that aren't even required by the DFARS contracts or the DFARS wording. So if you are on site with a construction building on base, they're not usually going to require a builder's risk. That's going to cover damage to the construction project while it's under construction. So let's say you're contracted to do a ground up building called a $5 million building, and you're 90% of the way through and fire comes in and burns that structure down. Who's responsible for recovering for that? I've looked at contracts, it doesn't say. So rather than wonder, maybe it makes sense to get a builder's risk policy that will cover that. So that way, if there is a loss, you're financially protected. Professional liability and cyber liability are not often required. Again, that's from the prime contract. That can be a huge risk. In most of the companies that we're working with and talking to are in that professional services industry. So if you don't have that coverage, or you're not required to carry that coverage, you could be at a huge loss if something were to occur. And then thinking about that, if you are the prime or you're getting contracts that don't require this, but you have subcontractors, just because you're not required to cover something doesn't mean that you might not want your subcontractor to have that. So if you are relying on a third party to perform a service for you, it's extremely important that they carry adequate limits and also have some other contractual requirements we'll go into in a second that will protect you in the event of a claim. The best case scenario is that if something happens that you were contracted to do, but you sub that out, you're obviously going to get brought in the event of a lawsuit. You want to be able to quickly pivot, tender that claim to the third party who is actually responsible so that you are not stuck holding that loss. If you don't have the insurance and contractual requirements to do that, you may get stuck with it. Now, your insurance may or may not cover it. You want to make sure that it would. But at the end of the day, you don't want to be holding the losses for someone else's negligence. So it's just extremely important. And make sure when you do create those contracts for the upstream and downstream party, have a legal representative look at it. I am not an attorney. I don't pretend to be. I do like to dig into the weeds a bit, but I don't know if something's going to hold up in court. So make sure that you are having a legal professional look at these things, because at the end of the day, you want to make sure that the words you're putting on paper are going to do what you think they are. So I kind of mentioned a little bit about subcontractors. I'll also say here subconsultants. There's some things you want to look at when you are drafting your agreements with them. Simple things like liability coverage. Subcontractor is going to want to have general liability. Again, that's going to protect against claims for bodily injury or property damage. And that limit that you're requiring really depends. If they are coming onto your site or going on to another site on your behalf, those general liability limits, you might want to push those up from the 1-2 minimum requirements to 5 million, depending on what they're doing. If they are sitting behind a desk and it's a subconsultant who is never going to walk on premises, you probably are fine with the 1 million, 2 million, because the idea of bodily injury arising out of that operation is slight. So again, really understanding what your risk is. Obviously, workers' compensation, You want to make sure that every subcontractor has workers' compensation. Workers' compensation is compulsory by the state that you are in. So most states, many of them, it's a no-fault state. And so if one of your subcontractors is injured through a fault of their own, maybe they weren't paying attention, tripped, and they don't have proper insurance, it is very likely, depending on the state you're in, that you could be on the hook for that. So you always want to make sure that they have workers' compensation. Even if they're a sole proprietor, that's up to you. I recommend that even if you're a sole proprietor and you're not required to have workers' compensation, maybe you live in the state of Texas and you're not required to have workers' compensation for any of your employees. You can still require it from a contractual basis so that you're protected as the upstream party. Quickly talking a little more of some different coverages. So that professional liability and cyber liability that I talked about, it's important to understand what the risk is there. So as I mentioned, with general liability, that's going to protect against bodily injury or property damage arising out of your operations. There's a few caveats there. There's always going to be an exclusion for professional services. So if there's bodily injury arising out of a professional service, say you're an engineer and you're designing and building a building on government property, that's going to be excluded by your general liability policy if there's bodily injury. There's also financial damages that have no bodily injury. What if you are, you're engineering for a part a component that's going to go into another component that will eventually go into a weapon? If your component doesn't work and therefore that next piece can no longer work, and so your client can't meet a deadline, there's no property damage. It didn't damage their product, but they now have financial damages because they can't complete a contract. That is where that professional liability comes into play. So you're going to want to make sure that you've got that, as well as anybody that you're using that could fall into play. Cyber liability, as you can imagine, extremely important right now. Cyber liability, which we'll talk about a lot in more detail, but it's going to protect you against breach of confidential data, personal data, also first party losses, meaning money and damages that you incur because of a breach. If there is a breach, there's going to be a cost of forensics. You're going to have to figure out what happened, who got in my system, did they get any data? Maybe they didn't get any private data, so you don't owe anybody any damages, but maybe they corrupted all of your data. And so now you have to rebuild all of that data in order to keep functioning. Maybe in that time, you are not able to operate for a week, 2 weeks. I have seen manufacturers that can't operate for months because of this. So there is business interruption that will come into play there that won't be covered anywhere else on a property policy. And then obviously cybercrime, huge issue right now. I see this every week where somebody is either tricked into sending money, they were close to sending money, or they're getting requests that look pretty legitimate that they're sending money. So that's a big aspect of cyber liability, and you're going to want to see that. You're going to want to make sure you have it and make sure that your subcontractors have it as well, because if they have access to data of yours, you want to make sure that they've got the proper controls, number one, to protect it, because it's hard to get a quality cyber policy anymore without protections in place. So that's just a better view of where they are in their cyber hygiene, and also that might respond. I will make a big caveat here, especially in professional services. It is extremely common for vendors, IT vendors, SaaS providers, to limit their liability. So let's say you store all your data with a certain cloud provider, and that cloud provider is hacked. Even though it was their problem that they were hacked, there is typically going to be a limit of liability in their contract to you saying, we'll only indemnify you for X amount. Usually it's a proportion of the contract. So 6 months of your contract, 1 year of your contract. And that likely isn't going to do it. So you want to make sure that you've got your own coverage as well. This is super important, the contractual risk transfer piece. So you've got all of the insurance requirements. You also want to make sure that you've got the indemnification agreements to support that, and the additional insured an insurance requirement. So if your contract says that your vendor will, or your subcontractor will indemnify you for their negligence, that's wonderful. If they don't have that second piece, which is and list you as additional insured on their insurance policy, then that indemnification agreement might not matter. If they don't have the funds, which typically comes from an insurance policy, to indemnify you, then it doesn't do you any good. So you want to make sure that not only are you requiring them to have insurance, indemnify you, as well as require that you are listed as additional insured. There are some other clauses, the waiver of subrogation. Happy to talk more about that. We have entire hour presentations specifically on contractual risk transfer, so I can't go into it in too much detail now just because there's too much to talk about, but happy to talk about this offline. So let's say you've done all this well. You've got the contracts in place, the subcontractor requirements, they have to list you as additional insured. You need to verify that. So collect and review the insurance certificates. A lot of companies are familiar with that certificate. It's a one-page document that says you've got, the subcontractor, subconsultant has general liability, auto liability, workers' comp. You need to go one step further and get the actual copies of those endorsements for the additional insured waiver of subrogation, because that piece of paper, the certificate, doesn't mean much if the policy doesn't support it. So you want to make sure that you are actually getting copies of the additional insured endorsements so that you can verify that wording will apply in the way that you want it to. Unfortunately, that is not always the case. I have seen many, many, many insurance certificates that say one thing, the policy says something different, and the policy, there's a lot of case law here, the policy will always be the deciding factor. So that's just very important. This is just quickly a diagram to kind of explain why this is so important and how it can differ depending on where you are within the flow of risk. So, sometimes it's pretty obvious, again, from a construction standpoint. If you're a general contractor, you're always going to flow that risk down. You're not actually performing the work. So your subcontractor is performing the work. If there's damages, property damage from their negligence, they are going to indemnify you. But what if you are a contract manufacturer for an aerospace part? You are taking the design from your client. They've designed it, but then you are the one manufacturing. So there could be two areas of errors that occur. One is that there's just bad design. So if you manufacture to their specifications, you give it back to them, they give it to their client, it doesn't work. Well, if it was bad design, that's not your fault. If you are named in a lawsuit based on those facts, you want to make sure that you're indemnified by the company that created those specs. But what if there was an error in your manufacturing process? What if, one of your employees missed a step, so it wasn't made to spec, and then you give it back to your client, they give it to their client, and an error occurs? They're going to get sued, but it wasn't them that created the problem. They're going to send it back to you. So as you can see, it gets very confusing. So it's really, really important to understand where that risk lies so that you can address it and have those indemnification and insurance agreements in the way that they should be. At the end of the day, the whole point of this is to make it fair. Whoever is holding the risk should be the one that insures and defends against it. Okay. So executive risk liability is something that I think a lot of government contractors don't really think about. When we talk about executive risk, we're talking about things like directors and officers insurance, employment practices, fiduciary. We've got workplace violence here as well that I'll get into. And a lot of times companies aren't thinking about directors and officers liability insurance until they either have a board or they have investors, or if they're public. But anybody that is taking any money from the government for any sort of contracts does have risks against the False Claims Act. And we have started to see cases at a high level where they're being filed under the False Claims Act for basically overstating CMMC preparedness. So if you tell a client that you're here, we're 90% there to CMMC. Okay, good. We're going to move forward because we know that's going to be an issue. And then, someone is to find out that's not the case. There's a whistleblower or anything like that. That's where this False Claims Act is going to come into play. And you can get coverage under a directors and officers policy for this. And there can be a sublimit. It could be excluded. So if you are going to buy this policy, you want to make sure that it has the coverages that you're looking for. I was working with a client recently where there was coverage on the declaration page, $1 million of coverage under where this would fall, and then buried within the exclusions there was a $50,000 sublimit from any claim from a regulatory agency. Regulatory agency was not defined, and so that could be a huge issue. If you're buying this policy to cover that risk, you want to make sure that it's going to actually apply when you think that it will. I will say it's important to note that the policy is not going to cover intentional damages or intentional acts. So if you are defrauding the government, that is an area that won't be covered by these policies, but it will cover defense in that hopefully you were not doing that, and the policy will help prove that. And then you've got the defense in case and to get that through. Employment practices related claims. So this coverage protects you against claims of sexual harassment, wrongful termination, discrimination. And again, depending where you are in the country, you're in California, very, very, very big issue. We have seen cases increase significantly from a class action standpoint. And the reason for that, particularly again in California, is that there is legislation called PAGA that basically allows for anybody to create a class action against you, any claimant attorney, and bring in employees that you've had from up to 2 years ago, even if they weren't involved in the suit at all. So that is a really, really big challenge. There are policies that can protect, again, at least defense against that. But, in the last 5 years, everyone, probably now, gosh, I'm dating myself now, 10 years probably with the Me Too movement, we are seeing more claims of workplace harassment, of sexual harassment. So that's where these sort of claims are going to come into play. And social inflation, which we talked about earlier, is where we're seeing this have an effect as well. So because of that Me Too movement and sort of where that we've seen this go over the last few years, something that maybe would have been settled for $100,000 if it gets to a jury could go policy limits, just because there's a feeling of retribution that needs to be had. So that's just important that's a coverage that anyone should be looking into if they have employees. This is one of those situations that you need to evaluate your risk. It typically does come with a high premium as well as a high retention or deductible. So you might look at that and say, this doesn't make sense for me. It's too expensive. Totally fine. Think about the risk that you have there. Take that money you didn't spend on an insurance policy, put it into your HR practices. The best way to fight off a claim like this is to have strong, solid HR policies and procedures. So again, this isn't necessarily saying you have to insure everything. You absolutely should not, but explore the options and then determine how you're going to manage that risk. I did want to call out the workplace violent event prevention program that is going to be required for companies by July 1st, which is around the corner. So annual training is required. This is specific to California, but I do understand that they are looking at other states as well, so something to be aware of. And especially important to government contractors is if there's multiple employer settings. So if you're on contract and you're there with other employers, there has to be a coordination of these plans. So just something to be aware of.
So Natalie, if I could interrupt real quick and put you on the spot. Sorry. Yeah. And I did put us on the screen now so everybody can actually see our smiling faces. So, and again, I know I'm putting you on the spot with this, so no harm, no foul if you're like, nope, can't answer that because I want to do more research. But with government contractors, and specifically, there's a lot of times where the government contractor might be a wonderful employer and might have all the right policies in place, but the actual workplace for the employee is on a site that is not controlled by that contractor. So in that case, would the workplace coverage be designed to also cover you for exposure if someone else is treating your employees badly and they had grievances there, or
so
that makes sense?
Yeah. So from an employment standpoint, it's going to there's the policies protect your employees against, or protects you from claims of your employees and protects you of claims from third parties. So in that situation, if your employee is being discriminated or harassed by a third party, you would actually, that claim would go to that third party, if that makes sense.
But if you had a bad hire and they were behaving badly on client site, then okay.
Right, exactly. Yeah. So if they said, "Hey, they're the third party, right?" And they say your employee is harassing me. I mean, we've seen it as simple as somebody coming to deliver a package it makes inappropriate comments to the receptionist. I mean, if there's harassment, that's where that coverage falls into play. So it really just depends on. The policy is designed to protect the employer for those allegations. Now, let's say, now I'm going in the weeds, but let's say your employee comes to you and says, I feel like I'm being harassed at XYZ company by their employee, and you do nothing about it. And you say, shake it off. That's just their way of being funny. And then he comes back to you later and says something and you shake it off. If you don't take action, that could now come back to you because you weren't protecting your employee, even though it was a third party that was actually doing the act. So that's where that could kind of come back to you.
Yep, makes sense. Thank you for entertaining that question.
Yeah, of course. So cyber risk. Anybody heard of it? Wow, it's not talked about ever. Huge issue everywhere. Just this slide is geared to show you how big of an industry this is. So cyber crime damages is predicted to go is at $3 trillion in 2015. Last year was about 7.5 trillion. Expects to go to 10.5 trillion in 2025. This is the largest GDP, the third largest GDP in the world. And it's obviously not a nation. So as you can tell, this is a huge issue that's continuing to grow that we're not going to see go away anytime soon. This shows you sort of where those attacks are targeted. This is from 2022. The source is from the Checkpoint Security report. 2023 recently came out, but I haven't had a chance to analyze it yet. I did see the number or the sort of the rank didn't change much. I did see a few incidents going down, so that's good. But the point of this slide is just to show you, government, military, right up there. Of course, there's key information to be had. There's also, these bad actors know that if your data is taken, you're going to pay ransom. You're going to try to get out of it because it's so important. So that's why some of those are targeted. ISP, MSP, so your service providers, of course, you are the gateway into everyone else. So if a bad actor can get into your system, which has 40 clients working within the government contracting space, and they can now get into their system, that's a jackpot. So that's a huge area of concern, wanting to make sure that you're protected as much as you can be. You would think so, because obviously that's what you're doing day in and day out. But just important to know that you're a huge target. And then I wanted to make sure that those that are in the manufacturing within the government contracting space understood the risk is there as well, especially from a business interruption piece. A lot of industries, and we saw this after COVID, can be nimble and shift quickly. If something happens at your location, you can get up working from home. If your network is taken down, maybe there's going to be some time where you have to rebuild it, but you can get up and running very quickly. If you're a manufacturer and you're relying on your network to actually produce a product, and that doesn't work, and you can't produce a product for a week or a month, that is significant potential for loss of revenue. And bad actors know that. So they target manufacturing as a huge target for ransomware, because if they can get into your system, have you feel like they're going to be locked up for any amount of time, the more likely you are to pay that ransom.
And we do see a lot of, or at least recently in the proposals that we've been supporting, cybersecurity and supply chain risk management is a huge area of concern. So there's questionnaires, there's plans that you have to detail. They're usually due after contract award, within 60 days. So this is something the government knows could be potentially very disruptive. So not just from the insurance side, but the actual having the plans in place, like Natalie's saying, really important, because there's absolutely everybody sort of knows it's this vulnerability, right? I think you put that really well.
Yeah, no, and you kind of bring up a good point too. That's where that understanding the contract piece, when don't look at it just from an insurance perspective, because it might not require cybersecurity insurance, cyber liability insurance, but from an overall risk perspective. One of the requirements I see very often in government contracts is that you have to notify your client within 72 hours of a potential breach. Are you aware of that? You'd be surprised cyber insurance policies aren't really aware of that, because that's a contractual requirement. That's not a regulatory requirement. So when they're doing their check of HIPAA, SEC, things like that for the requirements, your contractual requirement's not in there. So it's just really important to know what's in there so you know what to do, and having that plan in place. So if your contract says you have to notify them within 3 days, that is in your response program if there's a cyber incident. I also would just kind of do a plug of, if you don't know how bad things are, even if it looks very, very minor, talk to somebody, figure out what's going on. It is not uncommon for a bad actor to get into a system and sit from anywhere from, 30 to 180 to 365 days monitoring, looking at things. So you might think everything is normal, and they're actually in there collecting information on how to then shut down your system. And that's a big part of, making sure you get to that early. So some major threats I'm seeing out there, the use of AI is crazy. Deepfake is, where somebody is able to basically take your voice, your likeness, your image, and use AI to confuse your employees. There was a situation earlier this year in March, multinational company, where a finance executive got an email, was suspicious of said email. The email was from the CFO saying, "Hey, we are going to be looking into investing in this company or an acquisition. We need to jump on Zoom so we can talk about it. This is confidential. So, let's make sure no one else is aware of it." All right, seemed a little fishy. Jumped on Zoom. The CFO was there. Other executives from different departments were there talking about this acquisition that was going to need to take place very, very quickly. That finance executive was told to wire out money. And the next day he wired out over $25 million, and it was all fake. So that's terrifying, but it is out there. It's not hard to, especially with, large companies, it's not hard to get that data, that voice. But even small companies, think about social media. I'm sure this webinar is going to go viral, and so my voice will be out there, right? So just be aware that there are things that, even if they seem safe, maybe there needs to be different controls in place. Supply chain attacks and vendor vulnerability is huge. I talked about that a little bit with the MSP. Where are these people? Where are these actors getting in? If you think about, everyone remembers the Target, I don't know, it was a big deal in our industry. The Target hack from 7 years ago, where everyone's credit card information was stolen. That hack came through an HVAC contractor that was working on their air conditioning system. They were able to hack that HVAC company's network, and because the controls were on the same network as the POS systems, the bad actors were able to get into that. So they are trying to get in through these, Target, probably pretty protected. H&R, HVAC, maybe not as protected, especially 10 years ago. So there are ways to get in that way. Like we talked about with the managed service provider, that's a huge one. And then also your vendor vulnerability, just for, can they do what they say they're going to do? If you are relying on a particular subcontractor, subconsultant, or vendor for a specific task, or let's say a product, and they go down from a cyber attack and can't fulfill their duties, what about you? Does your cyber policy then protect you against their shutdown? And that's really important, because you don't want to be out, especially You don't want to be out any revenue from someone else's breach if it hadn't affected you. I mentioned the target and the manufacturing, kind of understanding how everything is working together now. So the Internet of Things. So especially with manufacturing, those making sure you've got your networks segregated. And this goes even within professional services. There's many professional services company that, they do 95% DoD work, government contracting work, 5% commercial work, or even vice versa, 95% commercial, 5% DoD. Separate those things. One may have a higher target. You can segregate those networks so that they're not getting in through the different areas. And then I can't stress enough the people factor. You could have the absolute best security in place. It's not going to stop somebody from making a bad decision, a hasty decision. We all are moving so quickly. You could, and it just takes one click of a link. It takes one misstep in a process where you don't check if you're supposed to be able to make a certain payment. And that is the number one reason that we see things going sideways. So the good news is there are cyber insurance policies that can protect against this. They are extremely confusing. Cybersecurity and cyber insurance policies are the wild, wild west of insurance. If you think about things like general liability that have been in place for over 100 years and litigated against, I think I heard from an attorney last week that it is the most litigated contract in U.S. history. We know what's going to happen there. Not the same thing with cyber. Every single policy is completely different. They use different terms. They have different language. They have different exclusions. So that can be a challenge. So a few things you want to look for that I think would be very important for you. I mentioned that dependent business interruption. You've got a supplier, a sub-consultant, a subcontractor that's out. Doesn't affect your network, but they're out and are unable to fill something for a certain amount of time and you lose revenue. You want to make sure you have dependent business interruption coverage on your policy that will protect in case that happens. And then also look at, what type of vendors or dependent services are covered. A lot of times in these contracts, it's just MSPs or service providers. Very important. That's likely where it's going to happen. But again, if you're a contract manufacturer and you're relying on a vendor to provide a certain material for you to be able to complete your contract, they go down and they can't fulfill that for 2 weeks, you lose your contract. You want to make sure that your policy is going to cover that. I would absolutely look for robust cyber crime coverage. That's, again, that people factor. So social engineering, your employee gets an email. It looks just like an invoice they were supposed to pay for one of your vendors. It's got their same logo. It's the exact amount. The POs match everything. But they don't pick up the phone to make sure that those new wiring instructions are accurate, or this website they want to pay is accurate. We see that constantly. You can get coverage for that. Invoice manipulation, which is actually kind of the opposite. Someone might get in your system, get all that information we talked about, PO number or contract number, and they might scam your client. They might send your client a fake invoice. Please pay Cavignac $3,500 for this premium. Your client says, oh, perfect, done. I've got my insurance. I call them a month later. Hey, where's, this policy is about to cancel. Where's that payment? What are you talking about? We paid that a month ago. Whose fault is that? Is it my fault because my system was hacked? Is it your fault for not picking up the phone to say, I've never paid through this portal? What's up? So there is coverage that actually provides some coverage for yourself so you don't have to get into an issue with your client. And then funds transfer fraud is where someone actually just gets into your system and sends incorrect information to your bank and they transfer on your behalf. All of these things happen very frequently. All of these things are typically sublimited in a cyber insurance policy. So that's important to know. You might look at the top of that policy and it says, I got $1 million. Likely you got either 250 or less under these coverages. So just be aware of that. You want to make sure that your policy covers the cost to recreate and restore data. You come in on a Monday, all of your data is encrypted. There's ransomware, you pay the ransom. Great, your data is still 70% encrypted. you're going to have to recreate that data. That takes time. That takes your employees' time, money. There is coverage for that. You can also find coverage for defense outside of the limit. So if you're a government contractor that has a lot of private and sensitive data, if you are sued, that's going to be expensive to defend against, especially if there's class actions. There are policies, typical policies the defense will erode the limit of insurance. So if you have $1 million and it's a $500,000 legal bill, you only have $500,000 left to pay damages. There are policies that will look to cover defense outside of the limit, usually for $1 million or $2 million. And then always look for full prior acts coverage, because like I said, what that means is it doesn't matter when you purchase the policy, but if a breach occurred prior to that you didn't know about, you can still have coverage. This comes into play when I talk about that situation where someone's going to sit in your network for 6 months. Let's say they get in your network on January 1st. You had no idea. You buy a policy on June 1st, and then you walk into your building on August 1st, and it's set for ransom. If you don't have full prior acts coverage, that breach actually occurred before you had a policy, and there would be no coverage for you. So always make sure you look for full prior acts coverage. Some things to avoid, coverage warranties or very concerning conditions. I've seen a condition in a policy that says this policy will not respond if there is a failure to maintain your network adequately. Maintain is not defined anywhere. Adequately is not defined anywhere. So are you? Do you want to fight with your insurance company over that? When there's a claim? No. So make sure you don't have that. I also see a lot of policies that have a callback requirement for social engineering, where they give you $250,000, and then buried deep within the form, they say, but we're not going to cover that if you don't pick up the phone or authenticate that wiring instruction or ACH through a secondary method. That's great. I really understand from an insurance company perspective why they want you to do that. That is an absolute best practice. I recommend you guys do that. But if you do that, you're likely not going to make that fraudulent transfer. And that's what you want this coverage for. So I would highly recommend not seeing that in there. We're starting to see some exclusions for widespread events. If Microsoft 365 gets hacked, unfortunately, Chubb Insurance Company is not going to be able to pay everyone who is affected by that Microsoft hack. So we are starting to see those come into play. Not every policy has that. And then please look for co-insurance or supplements on key coverages that are important to you. Ransomware is seeing a lot of supplements. And then also, like I said, those cybercrime coverages. That was a lot on cyber. Any questions on that before moving on? Okay. So CMMC, I'm pulling this into the cyber slides. So as you know, there are requirements and there have been requirements from the Department of Defense on cybersecurity hygiene. They just haven't really been enforced in the past. It's always funny, like, why are we seeing these requirements now? A lot of contracts already required the equivalent of this. You were able to self-report it and nobody was really checking on it. So there is now the cybersecurity maturity model certification that is framework that's going to be required of all defense contractors that have access to certain information. So whether it be federal contract information or controlled unclassified information, or classified information that goes a bit higher. But you've probably heard about this going on. It has evolved over the years. It started with 5 certification levels. It was very confusing. Now it's down to 3 certification levels. Most of the clients that I'm working with fall within level 1 or level 2. It will be governed by the contract that you're working on and the type of data that you are holding. From my understanding, and I'm not an expert on this, but if you are just a supplier for the government, you're not holding any information on plans or any controlled unclassified information, you're likely going to be a level 1. That's, I believe, 10 controls, self-attested. You don't have to have a certification by a third party. But if you hold any of that any of the controlled unclassified information, if you're an engineer and you're working on remodeling a building, if you're, any of that information is going to be level 2. which basically means you're going to have to be NIST 171 compliant, which has 141 controls, and it has to be certified by a third party. So the implementation timeline is a moving target. It has changed multiple times. The last I heard is that it is right now in legislation for approval, and that the timeline should be finalized, should be by early 2025, and you could start seeing requirements in new contracts as early as next year. I don't know that for sure. It has changed. What I will say is everyone that I speak to, especially if you're level 2 or 3, has said that it is an arduous process. So start now if you haven't started. It can take anywhere from 12 to 18 months, and you do want to be ready to go when that contract requirement is there, because if you have not got that certification, you will not be able to bid on new contracts, and then they will be rolling that into existing contracts as well. There will be compliance and obviously ongoing management of this. So partner with a really, really good IT vendor that specializes in this. There are a lot of managed IT providers out there. I have seen a lot really jump on the bandwagon and say, I can help with CMMC certification. And I would caution to do your research. There are, databases out there of companies that have gone the extra mile to be certified as a company that can help you prepare, different than the company that will actually assess, but definitely take the time, work with the right company, because this could be the difference in making, getting a contract or not. All right, moving on from cyber, some other things that I wanted to touch on that I think could be important for you. Just territorial considerations of a government contractor. There are people all over the country, like we're talking about, sometimes in different countries. So have an idea of where you're going to be working, where you could be working, because that can have an effect on the insurance that is needed. You might be based in Texas, but you are going to be working on a project in New York. Make sure that your insurance contract doesn't have any state-specific exclusions. Most have exclusions for states like New York, Hawaii, not in that most, but there are some. So just make sure that you know that where you're going to be working, especially if you're going to be physically working there, that there aren't any state restrictions on your policy. You might need special workers' compensation insurance called USL&H. If you are working at a shipyard, if you are going on a ship, that's not moving, but going on a ship, you may need USL&H. I say may because you might not. And I have fought my way with a couple insurance companies on this. A lot of professional service companies don't actually qualify for it. However, that can be a gray area. I don't know everything you're doing while you're on there. And so if there might be a time that you do qualify for it, you can get policies that cover it on an if any basis. So that way you're not paying for the USL&H policy when you don't need it, but there's still coverage in the event that you do need it. Defense-based SAC coverage. If you or any of your employees are going to be working on a government contract while outside of the United States, there is required special insurance for workers' compensation that is going to cover you while you're out there. It's not going to be covered by your traditional policy. It's much more expensive, as is USL&H. So if you're bidding these contracts, that is something that we want to think about so that you can actually bid it properly. It might not make sense to bid on a certain project if this cost is going to outweigh the reward of that contract. And then international package policies will sort of fill the gaps between what we already talked about. So they can offer general liability coverage, auto coverage while you're out there to just help protect yourself. We'll move really quickly. We're almost out of time. As I mentioned in the beginning, there are different ways to manage your insurance program, ranging from guaranteed costs, which is probably what you're familiar with. You pay X amount of premium, and if there are losses, your insurance company will pay losses up to a certain limit. Most participate in that. As you grow, as you have better risk control mitigation practices in place, you might want to take on more of that risk. If you know you can better control your losses, Maybe you have a higher deductible. You're going to pay less in premium. You can manage those in-house. And then you can look at alternative financing like captives, where you actually participate with a smaller group of like-minded companies where everyone's focus is on safety and reducing claims, so that you're not paying the claims of 10,000 Hartford Hartford insureds, maybe just 50 that are within your group. It just really helps you manage that better. But it's typically going to come into play as you grow into a larger company. So some key takeaways: always analyze your contractual requirements. Look past the insurance requirements. There's more to your risk than just what is required from a limit standpoint. Emphasize your strength in risk management. As I mentioned, there are carriers that are restricting coverage. So if you are doing a good job, make sure your broker knows. Help them tell your story so you look better than the company that they're looking at in 5 minutes to insure. You want to make sure that you get the best terms and conditions. Don't ignore cyber. It's not going away. I'm sure that's not a surprise to anybody, but definitely just make sure that you're continually focusing on the best ways to protect yourself from both a proactive standpoint as well as reactive on an insurance policy. Think beyond our borders. Again, if you're going to be looking at a project, will it take you outside of your traditional territory, and what will you need from an insurance and risk perspective? And then as you grow, assess alternative risk structure programs, because it may be able to save you costs along the way. That is all I have. I'm not sure if there's any questions, but happy to stay on if there are. And yeah, let me know.
Yeah. So Natalie, thank you so much for this presentation. And I'm very excited that we recorded it and we're going to be able to put it in as part of our contract success webinars. And just a couple of points that you made that I think are really worth repeating, right? It's as you're evaluating your risk, you can't get into the tunnel vision of just fulfilling the requirements that are in the solicitation of the RFP. That's going to be detrimental to you in two ways. One is that you're going to miss something, right? It's not going to be all encompassing of what you might actually need in delivery. And two, there's a time element to this too, right? Like there's some things that you probably need to have in place before you even consider how you're going to do delivery with certain agencies and certain locations with certain types of things. So that's really why we wanted to get the word out about this. This isn't about like, okay, this is all the stuff you need for NASA Soup 6. It's not tied to a specific contract. This is tied to how you do operations and how you safeguard your company and its reputation and the things that you provide. So again, Natalie, thank you so much for going through that. I'm really excited to see some feedback that we get on this. But we are at time. I don't see anything in the chat. I don't see anybody with raised hands. So I think we can end on time today. Fantastic job. Really excited to partner with you on this. And I look forward to another topic, hopefully someday soon. If you have any questions, please reach out to Trident. Please reach out to Natalie. The contact information is here. And we hope to talk to you all again soon. Have a great day.
Thanks so much.